Hello and welcome. My name's Chris Cann with Mining Journal, and with me I have Alexis Morgan, Global Water Stewardship Lead with the WWF, the Global Conservation Organisation, and this is part of our Digging for Climate Change program. This is the second conversation we've had with Alexis around water, and today we're focusing on how miners should be building a climate-relevant water strategy. Welcome, Alexis.
Thanks, Chris. Good to be here.
What are the first steps towards establishing and acting on a climate relevant water strategy?
So this is something that's come up a bunch, and what we've seen is that often people start with a commitment of some kind. And my take, and perhaps the take that WWF has had in this, is start first and foremost with, rather than with a commitment or some kind of sustainability commitment piece, start with the business strategy. That's at the heart of really what matters to the business, and embedding your plans in that makes the most sense. Are you competing in the marketplace through costs, through growth, through specialization, through long-term asset development, whatever the case may be? Last year we put out a guide called Embedding Context into Strategy, and through that we really established a bit of a process pathway to doing this, because we were seeing a lot of people saying we're committing to this without thinking about, like, does that actually make sense for the business? And in that we sort of said, look, start with an assessment of your business strategy. Think about where water in particular and where it sits within your value chain, and how it can affect different parts of your value chain, because people often go to operations, but it may have massive impacts on logistics if you're moving things through barges, and we've seen things like that in a number of places. Once you've done that, look at these issues of how it can affect risk, scenario, how you kind of think about values and those sorts of things. And then from there, ensure that your responses are kind of rooted in the context. So focus on scarcity where scarcity matters, focus on pollution where that matters. Make sure that your responses are appropriate given the nature of water in those places. And then once you've done that, then go about setting your kind of water targets. Overall, I would say, for WWF, we tend to talk about the development of corporate water stewardship work as a bit of a journey, and the starting spot on that is really just awareness, making sure you've got awareness of water issues, and from there understanding risk, moving into action, and eventually moving up into more advanced forms of action, working on collective action or even governance issues. So that tends to be the journey, but in terms of like where to begin, it's always rooted in business strategy.
How does it look when you're building a strategy for an existing operation versus something that is brand new and you have other opportunities? What are the key differences when you're looking at your best approach?
Yeah, I mean, I think with anything like this, earlier is always better, and I think it's certainly possible to do this sort of stuff, whether it's before a mine is built or something that's being retrospectively put in. But the way I would describe it is design and early engagement are so cheap. Infrastructure fixing and trust rebuilding are not cheap, and they are not fast most of the time. So I think the more you can build these things in at an earlier stage, it's always going to be better. But it can be done, I think, at any point.
Okay, and you talked about focusing on a business strategy. What's the biggest bottleneck for companies when they're looking to practically put a water strategy in place? And are there any easy wins or clear kind of do's and don'ts to make sure that you are getting some sort of return on investment sooner rather than later?
Yeah, I mean, it's a funny one, because I would say the biggest problem probably is people themselves. It's people's mindsets, and that's because people see water usually A, as a problem, or B, at best, as maybe a cheap input cost, or something like that. They don't see water as a much more systemic risk, nor at all as kind of really as an opportunity. So we put out a number of different publications in this space. We put out a publication back in, I think it was 2015 or so, with IFC on valuing water, and another set a few years ago in 2019 called Linking Water Risk and Financial Value. And really one of the things that is, I say mindset, but it is that, there is a real difference between water as a the price of water versus the cost of water versus the value of water. And, water may be free or cheap for, a miner to operate with, but if they don't have it, operational cost on a daily basis can be massive. Or if stakeholder concerns over it shuts down, an asset, you're dead in the water, and it's no longer how much you paid for water at the site. That's irrelevant to the value that was lost in the mix. And so getting people to think of it that way, and also getting to people to think about, ways that they can evaluate value potentially affected, going through scenario kind of things. Shadow pricing is a possible pathway, and people have used that in certain circumstances, and even adjusting energy prices, because often water and energy link together, and we're seeing that in a number of places as well. But I think there's approaches to better valuing water, and once you've got some of those approaches in place, you can say, okay, well, if we were to lose this, maybe it does make sense to invest more in these water projects. They might not be cash positive in the short term, although where that does tend to be cash positive, if you can, is usually again around the energy water nexus. So sometimes saving water saves energy, and the payback is in the energy, not in the water. So there are ways to do that, but it's the bigger picture. How is value potentially affected at this site that you need to consider?
Okay. And just to finish, Alexis, one of the things that concerns us when we're having these conversations, particularly with commodity analysts, is just the supply deficit that's looming, particularly with metals now being the key driver for an energy transition. Demand was already high, supply already tight. In a world where there is going to be a supply deficit, what's the business case for implementing water and climate strategies generally when everything will need to be bought?
Yeah, I mean, I think I come at this from the perspective of, if you're coming at this because you're trying to just quote unquote be sustainable and hit some ESG rating or something like that, or, I don't know, get some premium for being a responsible miner, I think you're approaching it from the wrong perspective. Fundamentally, this is about long-term business strategy and outcompeting people and being in business down the road. And so the players that are going to make sure that they can get their product to market are going to be the ones that stay in business. And these issues around climate, resilience, water issues, it's not about, well, I did the right thing and therefore I'm good to go. It's, I did the right thing, so I actually got my product to market, whereas the other guy didn't do the right thing and he didn't get his product to market, and therefore he's gone bust. And so it's those kinds of issues that are in play. I mean, you can look at situations of, tailings, mine, tailings dams collapses and some of those sorts of things. And some of those are, engineering related and so forth. But increasingly what we're going to see as time goes on is we will see extreme weather events that push tailings dams to the extreme. And if you haven't prepared for that well in advance, then you're going to be caught up in regulatory hurdles and fines and everything else for some time to come. Or similarly, if you haven't accounted for, if you're moving things out by barge as an example, and we've seen this in places, and all of a sudden you can't get product out on a river system you were counting on barging it out on, you're in a world of trouble. And that's not about like, I did the right thing and therefore I should be rewarded. It's just fundamentally, you didn't get product to market, and so your revenues are dropping. So that's where I see it kind of playing into this. And I think that will continue to play out. In fact, as resource, commodity constraints get tighter, the players that are creative around those sorts of things, especially if you're moving into recycling materials, people are going to need to think about supplemental revenue streams, other things like that. That's where it's going to get, I think, more interesting, and people that are more water efficient are going to be able to operate in places that otherwise you couldn't. And so I think this will still play out as a competitive force in the landscape, not just as a premium. That's all.
Alexis Morgan, thanks very much for your time.
Cheers.